met with Dima and Taras. We became friends and decided that we have different profiles, and we would like to unite our knowledge, our experience in order to invest together in innovations and help our startups to grow. So since then, we invested in 45 blockchain projects on different stages as individuals or in syndicate. As for now, we did 25 token exits with average 9x return. We have different types of experience, as I mentioned, in portfolio management, in startups, in building companies from scratch. So that's why actually we call this 3x, because we have this synergy and complementary skill sets with different types of experiences. Speaking about our track record, we were focused mostly on the blockchain infrastructure niche. So we can see that it has shown the best performance over the last 5 years with 13x return and 211 IRR, which is extremely high. Of course, we did many investments in Web3 applications. Some of them you might know, like Covalent, for instance. We also did few investments in DeFi startups and game finance. In total, you can see, as I mentioned, we did 45 investments and 15 exits. You will be able to find our portfolio here. We will share this deck. So right now, 3x is more an ecosystem as just a venture fund. We have the 3x Investment Club, where we offer our members to co-invest with us in different deals, mostly in token deals. So people are able to join us with small tickets in seed or private stage and invest in great startups, as well as receive educational materials, analytical reports from us on weekly basis. Also, we provide advisory services for startups as a separate part of our services. And of course, if we invest in the startup, we can provide them for free. In terms of advisory, we have a lot of experience in tokenomics, in financial modeling, and in legal services. We also have validators and testnets departments that are managing by separate teams, but they are a part of our ecosystem as well as a part of value add to the infrastructure startups. We have educational program, and I'm happy that you became a part of it. I saw your profiles and amazing backgrounds. I think that we might work together in different ways in the future, and hopefully you will see those activities when you will work closely with your mentors and with other participants. And we have a charity department. We are supporting Ukraine because the big part of the team are Ukrainians, and we would like to support our people during this Russian aggression, as well as during all these years that will be following after the war. So we are donating 10% of our revenue every month to Ukrainian charity funds, as well as provide some immediate support to people in need. So today the topic will be the evaluation of Web3 startups. And generally, I would like to speak about our investment focus, about the process, dive deeply into the details, as well as I would like to engage you here. So asking some different questions to the audience, especially regarding your experience. In terms of our investment focus, before we were investing more broadly, but currently we are focusing on the 3 niches. The main one still for us is the blockchain infrastructure, not just because of the performance, but we believe that those protocols will, many of them will survive all crypto winters, all the market instabilities, and became a part of, some of them of course became a part of our daily life. So we are focusing here on layer 1 and layer 2 blockchains, and of course some middleware solutions. In terms of decentralized finance or DeFi, we are looking forward to some lending, trading tools, and of course are searching for some great insurance tools that can support this, I can say, new market, and make the lives of the customers more safe in the future. In terms of Web3 applications, actually here we are free to choose almost anything from the decentralized storages, messaging, social finance it might be, or even the future decentralized Uber. So it can be anything. I have a question to you. In which of those 3 niches would you like to invest, and why? So you can unmute yourself, say a few words about you, and answer this question. That might be interesting to hear.
Chris Gonzalez, 76 Capital Investment Associate. I'd say Web3 infrastructure, right? Because I'm thinking when you're talking about the Internet of Things and trying to get more objects or more functions activated by Web3, I feel like there's just a huge market space in the future. Like even here in America, people are trying to figure out how to do crazy things like water your garden with the internet, HTTPS and GTTM and other things like that. But that's just my opinion.
Thank you. Any other ideas where you would like to invest this year?
Yeah, may I speak?
Sure.
Yeah, Apurva Vyas this side. I'd like to invest in anything that has pretty less amount of investment. So the DeFi space is again over when they are receiving kind of investments, but the majority of hedge funds and other big banks are declining to invest in DeFi space, particularly because DeFi it kind of tells them to revamp their whole system, and also it's kind of like they are killing their profits by actually investing into it. So I would definitely try to invest in DeFi.
Thank you. Any other thoughts, ideas?
Yes, hi, I'm Christina.
So I'm David.
Go, David, go.
Okay, thank you. So I'm a computer science engineer, and well, I've been working for these last years as a Web3 research analyst. And well, I'm really passionate about all the Web3 landscape, so it's difficult to choose one specific niche, as well, like topics such as DeFi, NFTs, metaverses. If I had to choose one, perhaps I would say DeFi, because well, I've been working on a Web3 academy in which they create courses, and DeFi is like a really important topic. And I've seen many important companies investing in DeFi, and I think it's going to be something very revolutionary and with a lot of potential. So if I have to choose one, I would say DeFi.
Thank you. Please go ahead. You started to speak.
Yes, I'm from Italy. So based on my experience and, based on the bureaucracy of the Italian government and banking system, I was thinking when I was working as a credit broker, the structure was very flawless. So I'm thinking something, of course, related to the mortgage industry and insurance, just to, make the process lighter and fair to everyone. This is based on my experience, but of course, like David, I'm watching everything that's happening right now in the Web3.
Thank you. Great. Anyone else would like to speak? Okay, so let's move forward. I think we have a separate topic connected to different markets and niches, and we would be extremely productive on that lecture, speaking about niches and discussing with you everything in details. So as I mentioned before, the topic of today's session is investment process. It's extremely important to understand how it works step by step in a structured way. So for this process, together with 3X team, we built a CRM system that allows us to receive a lot of deals every month. So usually we receive around 120 to 150 deals per month. So no worries, everyone will have startups to work with. This program will be very intensive in terms of your analytical work. The biggest part of those startups are from Europe and US, but right now the United Emirates market is also growing fast, and we have some deals from this part of the world. So generally speaking, all startups goes through three main stages. The first one is screening, and our idea here is to identify red flags of the startup, and if it has something that is not fit for us, we just provide the feedback on this stage. The second is research. So if we see that the startup is interesting, it doesn't have any red flags, we can dive deeply into the research process and organize the first call with the startup, prepare analytical report, calculate expected ROI, and you will deeply dive on this part during your next sessions, how to do that. And the last stage is investment committee. So we organize more calls with the team. Sometimes it's 3-4 calls with the team. It depends on our needs. And of course, we do the legal due diligence and dive deeply into the process, and then discuss in the with investment committee meeting, discuss the startup on details. After that, as you can see, only 1 or 2% of all those startups receive investments. And in this stage, of course, I would like to move to more detailed slide where I explain all the details on every process. But before, I would like to ask anyone from the audience, what is your investment decision process and how long it takes? So please feel free to unmute yourself and provide some information on that. How do you make your investment decisions?
One, I think, Chris Gonzalez again, Swing Capital.
Yeah.
One, I think you have to identify what's within your thesis first. Like you wouldn't invest, let's just say another of these, in InsurTech in Latin America. That's your non-negotiable. Nothing outside of there. Obviously, a lot of firms do a lot more than that, but we'll start with that. Next, you want to go with the total addressable market TAM, because obviously there's going to be a lot of big players within that market, but you have to see within the total addressable market, who exactly are you targeting? Now, for SaaS platforms, that can be very niche, or with Web3 as well. And then after you kind of go through that, because that's going to determine your product to market fit, go to market strategy, you obviously look at the pitch deck, go through the whole due diligence process. Is there IP issues? Is there's all the other issues? And you go down the line like that. I guess before you get to the term sheet and looking at the financials and things, to answer your last question, I mean, I've seen processes as short as like 2 to 3 weeks, but as long as like 1 to 3 months. But that's just my personal experience.
Thank you, Chris. Anyone else want to share? You can tell your individual process of the investment decision.
So I think that there are like many different topics or things that you should analyze before investing in a project, like the team, the tech behind it, the tokenomics, also the type of governance, the type of utility that perhaps this token has, also the track records, the competition. So I think these are all very important things. Perhaps as well the smart contracts, is there are to see if they're safe or not, to see if the project has potential and well what it has to offer.
Thank you. Yeah, I agree on those criteria. All of them matter a lot, but I'm speaking about the process. So how do you make your investment decision? First of all, you search for a data, you put it together into the report, then you, let's say you have an advisory call with your friends or your colleagues and decide to buy this asset or not to buy it. So that's a process. But of course, in the next slide, we will dive deeply into the details. So I wanted to hear maybe your ideas on the process, how you do that, how we can improve that, because receiving every month 120 plus startups, that's a lot of job, believe me. Anyone else want to speak? Okay, if no one else want to speak, I will go deeply into the process. Do you see my screen? I just changed the view to mirror, or you still see the previous one?
No, we can still see the previous one.
Just give me a second. I will share my screen one more time. Do you see it now?
Yeah, yep.
Great. So right now we will dive deeply into the process itself. So first of all, we have different types of participants in this process. There are external partners who have blue color, general partners who have green color, investment analysts, gray, and marketing expert, yellow. I will explain all the process in details, and of course you will be able to ask some questions and provide some feedback after this. So let's start from the source. So in the beginning we have four sources of receiving deals. First of all, startups can submit the deals through the form that we have in our website, or they can receive the form from our external partners and do that. Also, there are venture funds and other partners with whom we are deal sharing. So those partners can just send us a pitch deck or submit the startup to our CRM system. And also there are like deal sourcing methodologies that our investment analysts use in order to find some great deals that recently started a fundraising. And we have as one of the source general partners who are participating in the conferences and meeting a lot of people here and there, and also providing a lot of deals to the fund. The first stage is screening. On this stage, investment analyst tries to identify the red flags. If there are no, but usually there are a lot of questions, we do the screening up to 7 days. So it takes up to 5 working days, but 7 days in total. And we move this process to the call, where usually I, as a lead of our research department, speak with investment analysts in person, and we discuss the startup, and we make a decision based on this screening process. We will also go through it later on. So if the startup doesn't fit our expectations, we move it to a feedback stage. So it is here. and we provide the feedback to the startup during the next 7 days. And after that, move it to rejected stage if the feedback was provided. We see that the startup might be a good fit for us. We reach out, so we try to connect with it or ask for introduction, and wait for some time, because there are many startups that are unresponsive for some reason. So we can wait up to 3 weeks in order to receive the final answer and then provide the feedback. Or if the startup is answering our messages, we organize the first call, where usually investment analyst only takes part. After the call, investment analyst prepares a summary from the first call with all the details regarding a part of the criteria that you have mentioned before, and of course much more. If we see that the startup is interesting but is not ready for us right now, it can be too early stage, or it can be a late stage, or the valuation is too high, we can monitor it and monthly check the updates. So investment analyst also has around 5 to 10 startups that he is monitoring every month and providing some feedback. And also we can move it to a due diligence, we call it stage, where we prepare a deal sheet. Deal sheet is a type of report that is like a one-pager, similar to one-pager of the startup, where you can see all the details from the market, team, tokenomics, technical solution, investors, and everything that you actually need for the startup. When we prepare the deal sheet, we move it to the review stage. So usually one of general partners take care of review and provide the feedback to the investment analyst. And then if we decide that we would like to talk with the startup, we organize the second call, where usually investment analyst and at least one general partner takes part. After the call, we write down a summary. We update the deal sheet, because usually as you know, we have some additional questions on every stage. The second call is more about the team, their past experience, their plans, so everything that is behind the pitch deck. And after that, with the analytical report, we are ready to move this startup to the investment committee. We organize every Thursday investment committee in our fund, and we discuss with investment analysts, general partners, and sometimes external partners some specific questions of this need. In this stage, of course, as in previous stages, we decide to move this startup to the feedback stage here, and it will be rejected as 98 or 99% of all the deals that we receive. And I think it's quite normal statistic. After that, we move the startup to the legal due diligence stage. Usually me, Dima, and Taras, we do this on our own, because we are lawyers in the past. We have a lot of experience and network to do that. And after that, we organize a third call with a startup team. Usually only general partners take part in it, and we discuss the terms and conditions of the deal. And after that, we provide some summary, of course. Everything is saved in our CRM system, so we can see the progress, how it works. As the next stage, we review and update soft or safe agreements, and we are ready to move forward with the transaction and signature. After we do the transaction, we have up to 2 days to make an announcement of the investment, and usually our marketing expert is helping here. Also, we write down a detailed analytical report on the startup. We review this report with the startup's team, and we do the publication and add the startup to our portfolio and to the website. So that's our typical process that usually takes up to 3 months. As previously mentioned, it can take as early as at least 3 weeks, but as long as 3 months. That's fair numbers. Do you have any questions here regarding the investment process in the fund?
Yes. So just quick question in regards to other forms of financing, let's just say convertible notes. Is that all settled in the last stage that you mentioned, or is that only applicable? Or does it only apply to safe agreements? What if there's like alternate forms of financing that you guys are trying to rectify at the very beginning?
So mostly we invested into the token deals in the early stages, seed and private stages. So it can be an equity deal plus token warrant, or it can be a token deal.
Awesome, thank you. Yeah, I'm not much of a Web3 guy yet, coming from sports tech. But now that I know that you can throw tokens there, I figured that's why I asked. Yeah.
Sure. So there are 2 types of agreements that we usually sign. Of course, there are some specific agreements that startups can create in different types of jurisdictions, but in 90% we have soft and safe agreements.
So can you use tokens if I'm hearing this correctly? I'm just trying to get a bigger grip on the whole token concept. You can use tokens in like an equity agreement. Is that what I'm hearing?
You can sign an equity agreement, and additionally, when the startup will decide to launch a token, you will be able to receive the token for the same size of investment that you have done in equity. So this is one of the practices that we have currently in the market. I think it will be evolving. The second scenario is just a token deal. So you do not invest in equity of the startup, you just buy a token. And when the token will be launched, you will receive it according to the vesting schedule. And on this topic, by the way, we will have the second lecture that is called, if I'm not mistaken, types of deals in the market. And so we will dive deeply into the types of agreements, conditions, and everything that you will need to understand this new market.
Sorry, Ivan, one more question. My apologies. So with tokens now, since this is a new concept to me, in regards to the capitalization table, is that going to have any impact? Because I know you're saying that tokens like equity would have a certain vesting schedule, like with, I don't know, with, let's just say, like on the lines of preferred stock, common stock, all that other terminology. But does tokens, will that have an impact on startups' cap tables?
Token has a separate, we call it FDV, fully diluted valuation. It's similar to valuation of the startup in equity, but it's actually the price of the current round, X amount of tokens that will be issued as a maximum supply. So I think we will dive deeply here, and definitely on the next Monday you will have the full understanding of the picture. I just want to give you general understanding that we also have the valuations of the round if we invest in tokens. and how it is calculated, what metrics do we use for that, you will know on the next Monday.
Thank you. I'll
It's
stop
very
talking now.
simple.
Hey, can you guys hear me okay?
Yeah, I hear you.
Yeah, so I have a quick question about the qualification process and for the team background that you guys use and how that gets evaluated. What are some of the key indicating background experience, and is it like a certification process that you guys are identifying with some of these founders, and how much time do you usually spend with them in terms of evaluating the background?
That's a good question, and frankly, we also have a separate lecture on that because it's very complicated topic, and we have a lot of tools that we use and suggest to use in order to understand that. But frankly, we have a lot of very simple like methods to do that. One of them is LinkedIn. It's one of the most effective business network that we have currently, and you are able to find everything, to even find a previous business partners of this person and ask about the feedback. You can use a third-party provider for this type of services, or you can do this on your own. It depends on you. And of course, you can do a lot of activities connected to the Twitter, to the governmental resources. Some of them are opened. I frankly remember a few cases that we had when the founders of the team had quite huge loans and unsuccessful previous business experiences that were registered in governmental data rooms, and we found this information and decided not to move forward because their stories with their with real facts were different. So actually we also use the questions in order to identify some potential red flags. Some of you might know that different teams, they have different values, and if those values are not fit your values as an investor, I think that you shouldn't move forward with the deal because it would be hard to work together. Yeah, and frankly, on this, we do not complete the investment process. We just move to the post-investment stage. So the stage where we are actively supporting the startup, because right now we are also a part of people who are responsible for their progress, their success, as well as they are responsible for our financial success in this deal. So we try to work more closer and always striving to improve. So no worries, we will dive deeply into these topics and provide more and more tools. I think Taras is leading this meeting and is very experienced on that.
Thank you.
Okay, guys. I think I took 10 minutes more than I should. I'm very happy to share with you this information, and we will come back to it, I think, a few times during the next 2 months. But now I would like to give a word to one of the guys who was a participant of our previous cohort, and right now he's actively involved in our team activities. So I'm very happy to invite to the stage Ivan Stoika, who will present his presentation on the topic of the staking and benefits of it. Ivan, are you here?
Please confirm that you hear me well. Can you hear me?
Right now I hear you well. Thank you. And you?
Oh, thank you. It's very nice to have you here. So my name is Ivan Stoika, and I'm an investment analyst intern at 3x Capital. And the topic of my today's speech is navigating a bear market, the benefits of staking. But before we start, just a couple of words about myself. I have 3 years of offline business experience. I manage a chain of 3 restaurants. I also did my master's in economics, and for the last 2 years, I managed some social media communities, including, of course, crypto-related ones, with an overall auditorium of approximately 1 million followers. Also, as far as I know, there are a lot of participants from a new 4th cohort of the investment analyst course. As Ivan mentioned, I was a member of the 3rd cohort and currently am. And maybe you can share some insights and motivate even some of you. So first of all, a quick feedback from my side. So it's overall a great educational program, and I really enjoyed it. Firstly, you will have 2 months of an intensive theory, which is accompanied by a lot of practical tasks and teamwork. But the most interesting part starts on the 3rd month, when you have a chance to apply your knowledge to practice. That is the stage where I'm currently right now. And we work with real startups, have conversations with them, and prepare comprehensive analytical reports on every project. And that's actually really cool. So stay active, don't miss lectures, and you'll sure enjoy the course. Hopefully some of you will also get a chance to handle a presentation like this. But moving forward to the topic. Next slide, please. Thank you. So I guess all of you are familiar or at least heard about staking. The detailed definition will be provided in the follow-up article on Medium. But at this moment, let's keep it simple. Staking is associated with a proof of stake consensus mechanism. In simple words, it is a process when you lock a certain amount of tokens on your wallet and earn interest. By doing so, you also help to maintain the blockchain safety and functionality. So that's basically why you receive the interest. But in fact, the process is, we can say that is identical to regular bank deposit. You just lock your money and earn yields. Now a quick interaction with you. I think I'm actually sure that 90% of today's audience are active investors. So can you please confirm that you're investing in crypto by tapping the emoji button in the left part of your screen? You can maybe dance, clap, or yeah, like this. Yeah, I see. Yeah, a lot of you are investors. But now please, yeah, almost everybody. That's really cool. But now please just hit any emoji if you are doing staking on the parallel with the investment. Yeah, only a few, but certainly less. And that is called actually a missed opportunity. And by the end of my presentation, you will actually understand why. Moving to the next slide, please. Yeah. First, let's discuss why you should start staking right now, at this moment, right in the middle of the bear market. The first reason for that is actually because it's a bear market. A prime time to accumulate any tokens you wish with a great discount. And staking can make this process even more efficient as you earn additional passive income in tokens. The second reason, it is safe and simple. I'm sure you already own a lot of tokens and that offer various staking opportunities. And in most cases, you can stake them on even on your centralized exchange in one click. That's very simple. Of course, it has some risk in general, but overall staking is the safest way to earn passive income if you are already an investor. So it doesn't provide much additional risk. And finally, it's profitable. So the yields in staking are significantly higher on average than those which are offered by classical financial institutions like banks and other institutions. Of course, there are some drawbacks that you should be aware of as you gain interest in tokens, but we'll discuss them just in a moment. And concerning the yields, they are approximately 10–20% annually. That's significantly higher than regular deposits. And just to illustrate, please move to the next slide. Yeah, if you look at the chart, that the capitalization of altcoins, we may notice that their market cap decreased by almost 75%, and that, of course, means a great discount. Of course, there is a huge chance that the price can go lower, but overall, it's already a nice discount and a great time to start accumulating some long positions along with moving them to staking. Yeah, next slide, please. Now, some quick math that you should be aware of. The potential rewards from staking are usually displayed with the help of these two indicators that you can see on the screen. The first one is APR, and it is just a very basic annual interest. The second one is APY, and it is a bit more complex. It includes the effect of compounding. It is easier to explain with an example. Let's say you stake 100 tokens for a year with a 10% APR. In a year, you will earn 10 tokens as a staking reward. But if instead of APR, we had 10% of APY, we would have earned a bit more. Not 10, but like almost 11 tokens because of the effect of compounding. So you need just to consider that the final reward with APY will be always greater. And by the way, you can use the formulas you can see on the screen to estimate your future earnings. Yeah, let's move forward. Now let's talk a bit about the risks of staking. There are actually only 4 of them, but running ahead, they're almost the same to the risks from regular investment. So generally, staking doesn't provide much additional risk that I mentioned before. The main risk is, of course, the potential that the value of the staked coins will decrease. This can happen if the market experiences a downturn, or if the underlying technology or developing team or of the stake coin experiences issues. So, of course, when the price of the tokens will decrease, you will earn less rewards, and you can even suffer some losses. Second risk is the potential for a staking pool or a validator to act maliciously or become compromised. Remember the case of FTX. If I'm correct, they also provided some earning options. Not sure about staking, but the staking platform can just collapse, and that's another risk. The 2 other risks are less obvious. So in addition, staking also comes with the risk of regulatory changes. So governments around the world are still figuring out how to regulate the crypto space. And it's likely that staking could be subject for future regulations that could negatively affect the returns in stakecoin, like some taxes may occur, and etc. And probably the least obvious risk is centralization. It's a significant risk when staking on cryptocurrency exchanges. When a large portion of staking rewards are controlled by a small number of entities, it can lead to a concentration of power and lack of decentralization. So it's a huge threat to blockchain as it increases the possibility of 51% attack and so on. So to mitigate this risk, you should, of course, do your own research on the projects you plan to stake, choose a reliable staking platform, and of course, diversify your investment. But in general, comparing to other passive income options like liquidity provision or lending, staking is much more safe. Moving forward to the main question, where to stake? Of course, you can run your own staking node, but it is way more complex. So we will start with 2 basic options. First of all, you should consider staking on your centralized exchange. A lot of popular exchanges provide built-in staking, and if you hold some altcoins on your exchange account, which you, of course, do not recommend in the safety reasons, why not to stake them if you already hold them on your account? It is very simple and could be basically done with one button. Although the bad thing is that APRs and yields on centralized exchanges are usually lower. Yeah. The best built-in staking service is next slide. Yeah. So the best built-in stake service right now is probably Binance. So if you have Binance account, just take your coins. Here you have various options. You could either run DeFi staking, which is actually basic staking, or you can use a simplified option that is called Binance Simple Earn. Actually, that doesn't relate with any blockchain activities, and it's more like a simple bank deposit, but the mechanics is the same. You just lock your coins and earn interest. Overall, staking on exchange is very flexible. You can stake almost all of the popular tokens, as you can see on the slide right now. Either you could choose a fixed period to stake, like 30 days, or perpetually. But you should consider that if you choose a flexible staking period, the rewards will be significantly lower. That's the thing you should remember. Second option is to use previous slide, the previous one. Yeah. Second option is to use some other special staking pools and services. It is a bit more risky and complex because now you should do a detailed research on the staking pool you choose. Also, you should register an account, connect your wallet, so it actually requires a bit more actions. But the good part is it is more profitable in general, as the yields on such staking pools are usually higher. One of the best options on the market right now is Lido Finance. Yeah, it is a very popular staking pool where you can stake some of the most popular altcoins. You can see Ethereum, Solana, Polygon, Polkadot, Kusama. And you may notice that the APRs are pretty decent. Maybe on Ethereum they are quite low, but on Polkadot, on Polygon they are pretty much okay. Finally, I would like to share some key insights and guidelines about the process of staking. So the first point is to choose the right deal. What I mean, we want to stay, of course, with the highest possible APR, but we will also want to stay a reliable token. So the deal should be balanced in terms of risk, not too risky and not too passive, not too low APR. Also, it is better to choose a fixed term, of course, because of the yields. Secondly, you should have an investment plan. Of course, you should focus for a long term, but you should also know your goals and when you're going to exit. Taking without the plan is obviously bad, like the investment without the plan. The certain side, you should avoid greed. It is tempting to chase the highest possible APR. I can understand that really well, but remember that the higher the APR, the higher the risk. High rewards are often offered by pretty unreliable tokens or platforms, so aim for reliable deals, for reliable ones with a reputation, and also with decent returns. Yeah, don't chase for quick profits because that will end bad. The fourth point is that you should be aware of market conditions. You should always remember that if the token price decreases, the staking income in USD equivalent will also decrease. For example, when the token price is $100 and the APR is 10%, even if the APR increases to 20%, the decrease of token price from 100 to 10 will result in lower staking returns. I hope you can understand that. Hence, it's best to stake when the token price is low, as it is right now, and it is expected to grow. So, avoiding. So basically, just stake on bear market, unstake on the bull market, and finally, stake all that you can. If you have tokens that offer staking options, you should stake them. You plan to hold them for the long term and not to sell them soon. So basically, that's it, and we are ready for the summary. Yeah, staking offers a unique opportunity for cryptocurrency investors to earn passive income. It is relatively safe and in a straightforward manner. By participating in network through staking, you can receive decent rewards for simply holding the tokens. To maximize your staking potential, it's crucial to select a trustworthy staking pool and deals with moderate annual percentage rate. Remember not to chase for the extreme high APRs that will end bad. Additionally, it is also important to be mindful of potential risks that I mentioned before and carefully consider all of the factors that I mentioned. And finally, of course, stake low and stake high, just in case. And yeah, that's basically all from my side. And I'm open to any sort of questions. Feel free to connect. Yeah, thank you for your attention.
Thank you, Ivan. Huge round of applause to please go ahead.
Yeah, thank you so much. My question is about risks, and just a simple question: have you ever tried to handle the price risk of staking? And if so, what did you do?
What do you mean by handle the price risk? So what I do is I recently started to accumulate my portfolio, and on those tokens where I have staking deals, I started to stake. For example, I recently bought a significant amount of DYDX because of my research, and I staked them successfully. Some of them I put into the liquidity pool, but I just try to take and buy the tokens that are low price, in which according to my analysis will grow, because I also been day trading for more than 2 years and I have some technical analysis background, so I use it in my analysis also to choose like the best investment and staking deals.
I see. Yeah, exactly. My questions was about what if the price of a token, for example, dramatically went down? What are you going to do? Because obviously the percentage for staking is not going to cover losses for the price down. Do you have any algorithms to handle that?
Yeah, actually, but it's the same process like in case of investment. So you can just invest in coin and it can go down without staking. Staking just get you additional rewards. So you should be careful about what you buy. Conduct your own research before investing. So even if you're just simply investing without staking, you can lose money on price drop. So personally, I combine investment with staking. So I don't look for only staking deals to earn only in staking. I always combine it with investment. So staking is basically more like a nice bonus.
I see. Thank
Hello.
you so much.
Hello, Chris from Poland. Can you hear me?
Yeah, thank you, Chris.
So are you going to show us any delta neutral strategies that, for example, a VC fund is using? Are you familiar with delta neutral strategies?
Actually, not really.
So you are
Maybe
playing on the side of the market, so you are shorting and longing at the same time and gaining the yield of it. So you are delta neutral, so you are gaining the API based on different protocols, on Compound, on any other DeFi protocols, and building like crypto Legos in order to have delta neutral positions. So whether it will go up or down, you are still gaining the API.
Yeah. Oh, now I understand you. That's because of the language barrier. Yeah, I'm familiar with that. I was also trying to develop a trading bot on such strategies, but that doesn't really relate to my activity with the fund. I'm not sure if the fund team is involved in such strategies. You should ask them. Because
okay,
currently I'm
understood.
not like
Also,
a full-fledged member.
all right. And the second thing, I think that it's really important for all of the newcomers that came here to be really careful about the inflation of the tokens if you are staking them, because you should be really looking on the lockups periods on the token to not be the exit liquidity for the market to stake, for example, for 30, 60, 90 days. And there are cliffs from VCs or business angels, and they are dropping the price because they are reaching out for the investment, for the returns. So it's really important to only stake those assets that you believe that you will hold until forever, basically. So if you are doing the dollar cost average strategy on Bitcoin, it's always good to stake that Bitcoin if you want to like hold it for 3-4 years. But I would really not recommend anyone that is not familiar with DeFi or staking to stake only for the high APYs because of the high inflation of the token, because it will really end bad for you. That's it. Thank you very much.
Yeah, really good point. Thank you, Christoph. It's really important. I think we'll proceed with more articles, maybe presentations in this topic, and to go deeper into such issues. But that's only our first material on staking. It's just a quick introduction for newcomers, but we will certainly go deeper into that. Thank you.
Thanks.
Yeah, so if no questions, I'll probably pass the word to my colleagues. I think Oksana is next. So thank you for your attention once again.
Thank you, Ivan, for such an interesting topic you covered. Hello, guys. It's my warm welcome to all of you. I'm really happy to see you all at this course. And yeah, looking forward to working with you during the course. My name is Oksana. I'm associated with X Capital, and as Ivan mentioned before, I've been involved in the second cohort of the course, and after that, the team, and I'm really happy being in top accelerators such as Techstars and Skydeck to get startup team. And it's my pleasure right now to manage educational department as one of the activity and Strix Capital, and looking forward to work with you once again. So today I would like to give you more details about our program, how will we work. And basically, yeah, let's start from the reminder. What is our Web3 investment analyst course? It's a unique program in Metaverse. So 12 weeks we will work with fundamental knowledge and we will apply this knowledge into real investment cases. You will gain experience in Web3 VC. You will prepare lots of analytical reports for VC funds, and you will know how the processes works. And network, I think it's one of our key value here, because as you can see at our chat that we united together really bright people, and feel free to network with each other, and I'm sure that you will bring additional value. So let's move on. Let's talk more about our interaction during the course. So we will have 1 hour lecture. Hope we will not be late as today. So the lecture time is every Monday at 15 UTC time. After the lecture, you will receive the tasks. So the time when with your mentor, and finally we will have peer-to-peer session which is optional, and will be live at Thursdays 14 UTS time. So as I mentioned before, this peer-to-peer peer-to-peer session is optional, but I'm this session will give you additional value. Startup. And with this startup, you each of the topic and prepare your deal sheet topic. And at the end, we have weeks practical say, so deal sheet preparation and feedback. And during that time, you will work with more deal sheets, your concerns with startup teams, and additionally have guest lectures from our partners. Next slide, please. So it's my pleasure to introduce our guesters. Could you please click the next slide of our presentation? Yeah, thank you. So our partners are really good experts in Web3 sphere. It's Christopher, Marin, Philip, and Emily. And they will cover different interesting topics about Web3, such as how to get a job at Web3, roadmap of Web3 startups, and the current state of the market. So as I mentioned before, these guest lectures will be combined with your practical months. So I'm sure that you will enjoy this time. Next slide, please. So talking about our next steps. So today you will receive your onboarding page with all detailed information about our organizational staff. Also, this page you will find information with additional educational materials that we highly recommend you to complete during the course to have a full understanding of the Web3 startups investment and analyzing topic. Please be sure that you have done all steps to be ready to start, and feel free to maybe proposition the first meeting, first mentor peer-to-peer session this Thursday, and after that next month we will have our lecture and crypto niches discovery, and hope you will enjoy your first practicals about regarding this topic. Next slide, please. We still have few NFTs to join the course. It's for someone who haven't decided yet. We have a lot of them, but we have a few. So this day is in our open auditorium. So that's why everyone can join us and ask questions and enjoy this Metaverse experience. Have this open Metaverse meeting usually during the week. So please follow us at LinkedIn and Telegram to receive an announcement about it. But by the way, the topic which we will cover at our course will be only available for those who have this Web3 Guild or Web3 X Squad pass. So as I mentioned before, in case you would like to join the course but you do not have NFT yet, feel free to contact me and we will manage the stuff for you. Yeah, so once again, warmly welcome everyone for our fourth cohort of the course. Looking forward for our 3 months together. Feel free to share your thoughts, insights, and ideas at our group chat. Please be active, share your work, share your reports, and also we highly encourage you to share your activity at LinkedIn pages, sharing your expertise about Web3, at Web3 industry. And yeah, looking forward to work with you guys. Happy to have you here.
Yeah, just a quick question. Can you hear me, Oksana?
Yes. Yes.
Where we can find the presentations?
All the presentations will be shared with you via Notion page. The access you will receive today. So at the onboarding page, you will find all information about our S3X Capital Knowledge database, and we will share the presentation as well as the recordings of each session at this Notion page. So you will receive it soon. Thank you. Any other questions from you guys? In case no, I'm really thank you all of you for coming, and please write an intro about yourself at our group chat so everyone can understand better who are with us doing this course and how we can be helpful for each other, how we can cooperate, and yeah, hope we have really enjoyable 3 months together. Once again, welcome, and wish you a good week ahead.
Oh, sorry for that. I just had one question. Will the recordings
Sure.
of the course be shared?
Sorry, could you please repeat?
Will the resources and the recordings of the course be shared on your LinkedIn?
No, the course will be shared with those who have NFTs, Web3X Gold or Web3X Squad Pass. So it's a unique knowledge and unique information that we are sharing with our course participants. But way as a mentor, opening tour, we really invite everyone to join us and to our Metaverse, and also we are streaming at LinkedIn and YouTube. So we are happy to share this info. By the way, talking about the course, it's accessed by the way, feel free to join our open Metaverse gathering as we are doing it the usual. So follow our LinkedIn page to find more information, announcements.
Thank you. Thanks a lot.
Thank you. Thank you, guys. I think if you do not have any questions, feel free to write these questions at our group chat. By the way, once again, thank you for coming, and have an enjoyable evening or day who are at the US. Thank you for coming.
Thank you.